Rand lost ground against the dollar for the third day running today as Eskom implemented another round of rolling blackouts, keeping investor sentiment depressed. Investors are keeping their eye on the Reserve Bank's interest rate decision or announcement on Thursday. The Monetary Policy Committee starts its first meeting for the year today. Earlier, Francis Hurd spoke to currency analyst John Cairns from RMB.
If you look behind you, weakening significantly today. Is that purely this ongoing reaction to Eskom's woes?
Not purely. Eskom's definitely impacting quite badly. The move to load shedding 2, I think has really hit sentiment. But there's a bigger story behind it. The Rand started off the year really strongly, much stronger than the other currencies that it usually follows, and I think we're now just normalizing, so just catching up with the weakness seen in some of the other currencies.
Because this isn't an unusual level. We were actually just strengthening for a while, is that correct?
Well, the only unusual level that you'll see up there on the board is on Euro Rand, with the significant Euro weakness after the ECB. Well, before and after the ECB weakness, Euro Rand has come down, the real Rand strength. I mean, Euro Rand was at 1470 a month ago. We came down to 1266. On your board there, you've got just over 13. So still the Rand's very strong against weak Euro. Dollar Rand looking there, it's 1155. That's nothing. We've been there in the past couple of weeks.
Just explain, because we used to follow the Euro a lot. The Rand was almost coupled to the Euro, but now is there something of a decoupling?
Yeah, so you can think about it. If Euro-Dollar's moving, then either Euro-Rand must move or Dollar-Rand must move, one or the other. So when Euro-Dollar moves, is it dollar strength, is it Euro weakness, which way is it going? So how the market has been treating the Euro-Dollar moves at the moment is that it's Euro weakness, and so it's Euro-Rand that has been coming down. So last year, by contrast, what we had is dollar strength. So when Euro-Dollar was moving, it was dollar Rand that was pushing higher all the time. Now, the Euro-Dollar movements are mainly being reflected in Euro Rand. Significant downside in Euro Rand. And you must remember, Europe's still our major trading partner. That's the most important cross from a real economy perspective.
Yeah, so significant. Just explain the big picture, how monetary policy is influencing the markets at the moment. So the European Central Bank, the stimulus, quantitative easing, and that could be good for us down the line if it means more money perhaps in investments, things like that. You can confirm, and I hope, and on the other side there's America, which is thinking of increasing interest rates, and they're meeting this week. So explain how it's all buffeting us.
Yeah, yes, Francis. So we're having significant changes in monetary policy across the globe in the start of this year. The real driver has been that dramatic fall in the oil price. So just like we're having petrol price cuts here, inflation is falling around the world. Okay, so deflation, negative inflation rates in Europe. ECB is printing more money. Bank of Japan is already printing money aggressively. The result, easy money, more search for yield, money coming into South Africa, helping the Rand. But it's not just the ECB, the Bank of Canada has cut rates, the Reserve Bank of India, Australia might follow. So a lot of people going forward in easing policy. The fact that the Reserve Bank hasn't moved in that direction yet has helped the Rand. And you're perfectly correct, the next move by the Fed is presumably going to be up. They're going to start hiking interest rates. But low inflation, weakness in the global economy means that the Fed doesn't have to rush ahead and hike. At this stage, we at Rand Merchant Bank think it's the fourth quarter of this year before the Fed hikes. So generally easy monetary policy. We're going to have to wait till Thursday to see if the SABC may be thinking of going the same way.
Well, let's talk about that. So there's no major pressure for them to go up, and we were, in fact, now expecting the next move to be down, but maybe not on Thursday. Are we going to wait and see?
Yeah, I wouldn't go so far as saying we expect the next move to be down. So what we've been is in a slow hiking cycle. The Reserve Bank has called it normalizing policy, just taking interest rates up above the inflation rate. They've constantly said that over the past year that they need to normalize policy, which means rates slowly going higher. Our expectation is that rates can just be flat for a long time before the hiking cycle resumes. But of course, there is that risk with inflation. Our view at Rand Merchant Bank is inflation is going to drop to almost 3% in the next few months. It's a significant fall off in inflation from the 6% levels. That opens up, maybe it opens up that scope for them to go ahead and cut rates later this year. So what we in the market are watching for on Thursdays is the SARB statement that the governor reads out going to change the wording. They've previously been saying future interest rate hikes. Will they now say maybe future interest rate changes, which will signal that they're thinking maybe they can cut towards sometime later in the year?
So all up in the air at the moment. The last question then is this lower inflation you're talking about, driven by the lower oil price, how sustainable is it? Are you expecting oil to stay low the whole year? I mean, the king in Saudi Arabia has died. Some analysts are saying it was purely a Saudi Arabian decision that led to this low oil price. So we could have a change in strategy.
We could have a change in strategy. The consensus view is that the Saudi strategy is not going to change. Oil prices have come down. Again, they are expected to come upwards towards the end of the year again. Importantly, when you talk about inflation, remember that you're talking about the change in prices. So even if oil prices are stable, that means no inflation. Oil prices have to actually come down to reduce the inflation rate. So it's a one-off effect at the moment of the price coming down. Inflation will fall temporarily before resuming, moving back towards that 6% level later in the year. But you're completely right. There's a lot of uncertainty about, firstly, oil, and secondly, the Rand exchange rate. Can really play with our inflation numbers quite a lot. And you say the rate decision's completely up in the air. Yes, we're talking about if it's going to be a hike or a cut, so it's completely up in the air. And you're right. Again, oil and the Rand can be the deciding factor there.
Anti-e-tolling group OTA is insisting